Hey guys, welcome to another exciting accounting lecture. In today's video, I want to spend some time talking about the accounting equation. So we're going to talk about three different ways to explain the accounting equation. And you can think of them as three different ways to explain it, but also you'll see in the video that these are three different levels of understanding: a basic level, intermediate, and then by the third level or method, that's going to be a much deeper level of understanding of what's going on with the accounting equation, which if you master and understand really deeply, you really pretty much understand half of what's going on in accounting. And so let's go ahead and list our accounting equation up here and our three methods down here. So the accounting equation goes assets equal to liability plus owner's equity. Okay, this is the accounting equation. The first level or first method of understanding is going to be what equals who. The second one is going to be own equals O. And the third is going to be assets. How are they financed? Okay, so these are the three different methods or levels of understanding. Let's go through them one by one. So let's talk about the method number one. Let's erase this. All right, so with method number one, the what equals the who, what we're talking about here is assets is our what. So what do we have as assets? So what are the types of assets that you usually see? You have cash, right? You got your accounts receivable. You got your inventory. So in this case, what we're saying here is that the accounting equation is only trying to list what you have. So the what is what we own, is the assets, and who owns the right or has the right to these assets, right? So for example, cash. If you have a long-term debt or loan from a bank, then what you have here for cash, you got a loan from a bank, right? And that's a liability. So what we're saying here, the who is the bank, right? Accounts receivable, in most cases, that's going to be ours. So that's owner's equity, right? So that's who. That's the who in this case is the owners, right? Inventory. So inventory, a lot of times the supplier will have the right to it because it's an accounts payable. So you owe accounts payable to supplier, and so the supplier is going to be the who in this case, right? So this is the first level of understanding, or the first method of understanding is the what equals the who. And that only says that what are the assets that we have on the balance sheet, and who has the right to these assets. With cash, you got a loan to the bank. With AR, the owners have the right to it. Inventory, the supplier have right to it because I still owe them the accounts payable. I haven't paid them yet. So this is number one. Let's go through number two, which is the own equals O. Let's go ahead and erase this, and then we'll put in number two. All right, so with number two, what we're saying is that the accounting equation is only trying to say what we own equals what we owe. Okay, so what we own is going to be the assets, right? So we own the assets. What we owe liabilities, and we owe the equity. Who do we owe the liability to? We owe it to third party, right? So that's all your suppliers, everybody you're buying from. Owner's equity, what do we owe to these guys? That's going to be the shareholders, right? So we owe the shareholders their share in the company once you satisfy all the liabilities. So this is almost like it is actually a math equation. So what we're saying here, all of the assets that we have, so our assets, let's say cash, equipment, right? So cash, equipment, AR, inventory, right? So this is the stuff that we own. If we subtract from this stuff what we owe to third party, right? What's going to be the result? It's going to be the owner's equity. So this is the second approach or the second level, that what we own in the company or in the business equals to what we owe to third parties and to the shareholders. So this is the second level or second way of understanding the accounting equation. Now let's jump into the final method, which is method number 3. So we'll erase this. All right, so with method number 3, all it says assets, how are they financed? How are they financed? So with this way of understanding the accounting equation, what we're looking at is how are we financing our assets. So let's take a look at some examples of assets, and then we'll take a look at how are they financed. So for example, we got cash, we've got accounts receivable, we've got inventory. So with cash, we have $1 million, right? So with the $1 million, you could have $200K loan from the bank, right? So that's going to be a liability, right? And then you have $800K equity, right? So this is an investment from the owners of the company, right? So this is equity, right? With inventory, let's say you have 500,000, right? This 500,000 could be divided as 200K from suppliers. Let's say AP to suppliers. You still owe it to suppliers, right? So it's financed via AP. And then you got in your inventory, you got 300K sitting as inventory that's fully paid for. And so that's equity, financed via the company's equity, right? So this is the third way of looking at the accounting equation. It looks at the assets and how they are being financed. And like I said, if you understand the accounting equation, I'll leave a link up here to another video that I made on using the accounting equation to understand debits and credits. If you understand the accounting equation, it can apply to so many areas of accounting that it's going to help you tremendously in your career. So if you like the video, give it a big thumbs up and share it with someone who you think might learn from it. And I'll see you in the next video.